Okay. Position AA42, Venice. Companies AA42, posting period, field status AA42, proposed fiscal year, define value date, okay, entry screen variant, standard version, and countries with classic withholding tax and standard version. Okay. Deviation, maximum exchange rate deviation will be 2%. And workflow variant, this is a separate discussion. Negative postings, permitted, yes. Managed posting period, yes. Tax-based net value, this is used in US. Discount-based net value, again in US. Purchase account, okay, we'll check this. Save. Okay, we're done. Country code PK, PKR. All right. Now, additional parameters, this is used for third-party softwares where 8842 Venice, where we actually give details, parameters like tax rate for country currency. We can fix it here. Detailed tax entry with Miro, this is for CGI party bank specific, again bank key will come here, and house currency percent decimal place, this can be parameters can be given here. I'm telling you because this can be asked during the interview. Okay. Edit template company codes. This is not a template, this is a proper company. 0001, 0003 is a template which you can use and copy. 01 is also a template. Okay, data was saved. Currencies, maximum exchange rate difference. Define maximum per company code. Position, 8842, Venice group is 2%. We have already mentioned in global parameters, maximum per foreign currency. Okay, PKR to AED 2%, USD to PKR 2%, and we can give USD CAD 2%. Save. CAD PKR 2.1, 2%. Okay, save. Indicate currency differences for partial payments. Document type KZ. Okay. What is KZ? I'll tell you. It is vendor payment. Exchange difference, partial payments by period. Okay. What are document types we will see when we enter the documents. So it enables partial payments with currency differences as well. Functional area, define functional area. Functional area, we don't want to actually do this right now. We'll do this later. Document types and document number ranges. What are document types? Like if you're posting for an asset, document type, this will be used. If you're posting a customer payment, DZ. Vendor document, KA. Vendor payment, KZ, for which we actually defined currency deviation right now. So there are document types for every transaction. Ledger 0L, function not permanent. Okay, we'll take another ledger. Let's say crystal paper, type and number range, entries, SA, number range 01. Save. Not possible for leading ledger. Okay. EG. Okay. New entry. Payment clearing. WS 02 or XX. Save. Okay. If there is an entry in WS, in ledger EG, type WS will be used, and we'll see when we make an entry. Next is what? Define default values. Okay, whenever you are using a T code, we will see when we are on the front end. Document type, default document types are given over here. Okay, there's a document types are defined in SAP standard. Post outgoing payment, this is a transaction code, and document type is KZ, which is vendor payment. You can change this as well. This can be asked in an interview as well. Enable fiscal year default. Proposed fiscal year, yes, in global parameters, we did it. Default value date 42. Okay, value date is, what is value date? Value date is used for check payments, bank payments, where due dates, value date is due date for bills, for vendors, for banks, like for salaries, due date, it is value date in SAP. So it will propose value date. Message control. Okay, that much is enough. Next is general ledger accounting, business transactions, document splitting. Document splitting, what is document splitting? Okay. Previous lecture, I told you about the hierarchy: company, operating concern, controlling area, and company code. Controlling area, there are profit centers. Okay. Now, for example, you buy material, raw material from vendor for 12,000. 12,000. This is the journal entry, but SAP standard, accounting standard says, oh no, for example, profit center dyeing, use 3,000 of this material. Profit center printing used 4,000. Profit center packing used 5,000. So accounting standard says to divide this entry as per the profit center. So the entry will be material cost center, which is connected to dying 3000, two eight zero zero, sales tax expense 100, no, 700, withholding tax, which is a deduction from vendor 200. Okay, and so on. I'm just taking rough values here, and so on. Material, CC, printing, same. It will go like that, 4000, and with the same details. So the vendor is split. It is not given the whole amount, but it is same vendor, same transaction. But now 12,000 split between 3 profit centers. This is document splitting. So now what we'll do, OBD4. Double F42. It says classify GL accounts for document splitting. Very important. Chart of accounts, double F42. New entries. Now we will give them accounts. Okay. Accounts are $3,000. Okay. 80250 is zero balance account, which is clearing accounts. I'll tell you later what is clearing accounts. 8040 is adjustment accounts. Again, it's clearing accounts. 1000, 1100 assets, again balance sheet item. 101 liquid funds, balance sheet items. 80201 clearing accounts. 01000. 2 equity 0100. 30201 expense accounts. Okay. Expense is either 5 or 6. Expense. 20,000. Okay. Now these are categories. For general GL. 90 HR accounts. 70 material accounts. Material also part of balance sheet accounts. Miscellaneous accounts. 30 income accounts. Income account is 40,000, I believe. Expense revenue 30,000. Enter. Okay. From 30,000, we take Control Y. No. Control Y. Control Y. Drag it. Okay. 60,000 is recon accounts. Recon accounts are balance sheet accounts. 80,000 secondary GL. Okay, secondary GL is 00. No, secondary GL will have a different category. Secondary GL. Secondary GL 01. Okay. 50 special GL will have 50050. Special GL vendor 5051 50100. Customer 80. Tax taxes on sales and purchase. Okay, we have material account 70. We have to change that. Page up. 7,000. 7,000 is material. F4. Material. Assets 1,000. Assets. Fixed assets. Okay. And then we have recon account 60,000. 60,000. Page up. Page down. 60,000. Because we'll make vendors from this. Vendor. Enter. Okay. Now, what is this override? Override for special GL vendors. What happens is that when you pass a general entry like this one, this vendor will have profit center reference, and so will this, and so will this. But the vendor, before supplying the material, will ask for an advance. This advance is recorded and captured by special GL. There is no transaction yet, no supplies, but the vendor asks for advance. So the special GL will also have document splitting with profit center reference. So this is where override means vendor will inherit these accounts and give the reference of profit center. Save. Okay. Next. Item category. Okay. Document types. Zero balance clearing. Okay. We go to front end and we go to SAP menu, accounting, financial accounting, general ledger, master records, GL accounts, individual processing centrally, new, 20,000 AA42. GL account type is balance sheet. Account group is equity. Retained earnings account. Retained earnings account. Control data. Category, tax category, all. Posting without tax allowed. Sort key 001, which is posting date. I will explain later. Field status group G00, G001. Post automatically, yes. Save. Okay. Venice group. Okay, we will change the company code AA42, and we have only one account here. Okay. Now, zero balance clearing accounts. We have to make that. Zero balance will come from 80250. 80250 balance sheet. Zero balance. Now, what is zero balance? I'll explain later. Zero balance clearing control. Clearing 001. Field status group G001, post automatically. Save. 80250. Zero balance clearing account. Over here, we will define the accounts, integrate the accounts. Chart of accounts AA42. New entries 80250. Save. Double 001. Eight 80250. Save. For cash pooling, this cash pooling is for banks and cash accounts. Save. This is saved, and I will change this control data. Account settings, controlling area, Venice group. Because we have used for controlling as well, where here, posting primary zero balance account. Data saved. I have made it non-operating expense because since it's a clearing account, standard account for zero balance, it will post in CO. CO is costing, controlling, posting primary. So it will be non-operating expense or income. And zero balance, actually, what it does, it's this. For example, sales tax is 700.1.2, 0.1. Withholding tax is 0.08. And For example, if there are like 133 entries like this, JVs, general vouchers, every entry will have taxes plus withholding taxes in points, decimals. So you cannot divide this in three profit centers or four or five. So what it does, zero balance collects all taxes plus withholding taxes, and once it is rounded off, it distributes to all profit centers. That is zero balance. So in the end, it has to have a zero balance. Okay. Next step. Characteristics controlling, just go through these because these are just theoretical. Post capitalization, cash discount on assets, it will use an asset, of course. Okay. Check organization structures. Not right now because we have to make that structure first. Activate. It is activated inheritance. I told you vendors will inherit the profit centers and assign to special GL. Document splitting will use the method customer vendor tax. Based on this, tax vendor customer will have profit center reference and it will break and split the general vouchers. Extended method, rule method, variants. Okay. Cash journal. There was another thing. What was that? Permit negative postings. Position 8842. Okay. Global parameters. Okay. Define reasons. We will use this later. For now, we are ready for entries. We'll do that in the next lecture.